Hi, Neil O'Brien here, and this video is about KPIs. But for a moment, just imagine that you're a coach of a sports team. It could be hurling, soccer, whatever. You're delayed and you come along to the match and it's halfway through the second half. Now, you're in charge of that team and you're meant to make decisions based on what the team need. Now, there's only one problem. There's no scoreboard in the ground. And let's just imagine there's nobody there can tell you the score. There's 20 minutes to go in the game. You have to make decisions. So do you change the formation? Do you bring on certain subs, defensive, attacking subs? What do you do? The problem is you can't really make a decision because you don't have the right information to make decisions. And the scoreboard analogy is one I often use with business owners, because as business owners we need good information to help us make decisions. And to me, a KPI report, weekly report, is like your scoreboard in business. And if you don't have one, then how can you make the right decisions for your business? Okay, what I'm going to take you through in the next few minutes is I'm going to talk to you about why KPIs are important. I have two examples of businesses of their KPI reports, and then we could talk about how do you go about designing your own report. Okay, let's drive on. So the idea of KPIs, a weekly report, key performance indicators, is to help you plan and track improvements, and for most businesses that is probably to grow sales. Now, Harvard Business Review did a study years ago when they looked at the most successful businesses in America, and what they found out is that 74% of them used weekly KPI reports. They were a key tool in the business, so that's a pretty important reason to use them. Successful businesses use them to plan and track their sales. I find them brilliant for focus. I've been in business 17 years. And so for most of those 17 years, I keep weekly KPIs on my wall. I update them every week. I plan ahead and then I fill in the actuals, and I find it brilliant for focusing on what I need to do to hit my targets. Now, one thing I like about KPIs is some people call them lead and lag indicators. So let's say, for example, cash in is your main KPI. Now, what influences that? Obviously, it's the invoice as you issue to your clients and customers will determine the cash in. What determines the invoices? Your billable work, the work you do in your business, billable work, work in progress that you invoice out to clients. So each one follows on from the next one. Now, many of you are in my huddle, in the mastermind. I'm going to talk about KPIs, but what we really need for the huddle is probably one main KPI for your business, and I'll come back to that in a while. I've looked at the businesses in the two mastermind groups, and I reckon about 30% of the people in the groups have KPIs. So most people don't actually have weekly KPIs. Now in December, we all set annual targets. Many of you set targets to grow your business 20, 30, 40% and your profits. So the question is, unless you've got KPIs in place, how are you actually going to know if you're on track or not? Yeah, you can do month-end reports, they're great, but they're kind of reporting what's happened, whereas the KPIs can not just track last week, but they can help you plan ahead as well a couple of weeks. Now, I have two examples I'm going to show you. A lot of people in the groups are service providers. We have accountants, engineers, web designers, and so on. So a lot of the people in the group are. So I'm going to take you through the main KPIs for this. This is an accountant, but it's probably applicable to many of you. Now, this accountant has decided that cash in is the most important figure for them. Like I said earlier on, what's going to determine the cash in is the fee notes they send out or the invoices. The invoices will be determined by the billable work they do. You can see here there's a partner, senior person, and two other people. Now, the figures over here, so we have an average, what the figures were for in 2018. We set a target last year and then tracked the actual. So this business said they wanted to go for an average of 6 grand a week to 8 grand in cash in, invoices, and billable work. Now, the average here is just really measuring. What you do then is you, at the very start, you have your target you want to hit, and you start tracking weekly what are your actual figures. And what happens after a few weeks, you will start seeing trends and you'll see the areas you need to focus on. Now, in this case, the accountant does actually have enough work. They have enough work in their existing clients to be able to take the average sales from 6 grand a week, which is 300,000, up to 8,000 per week, which is about 400,000. That would be an increase of 100,000 in sales and probably profits, because they can do the work with the same level of staff. Now you can see here, so what they're saying is the accounts work and tax calculations they do and so on. This office of accountants have a target to do 8,000 per week. Now how are they going to do that? The different people in the practice have different charge out rates. The partner charges out at 100 euros an hour. They expect to bill out 32 hours per week, so 32 by 100 is 3,200, and so on. The senior has a slightly lower rate, and you have two junior people here as well. So, and I didn't fill it in here, but you can imagine them tracking the actuals over here. So each one of them has a target. Real simple. If they hit their target, each of them hits their target, they will grow the sales by 2,000 per week or 100,000 per year. But if they don't, it puts the highlight on where it's happening. Say for example, sometimes the partners are so busy they're not actually getting the billable work done, so maybe the partner is the issue. Other times I see that the partner is doing a lot of the work and maybe it's the junior people, but at least they have a target, and with a bit of guidance and supervision and so on, they should be able to hit their individual targets, which would give this accountant an extra 2,000 per week for 50 weeks, an extra 100,000 sales in the year. Now I'm going to show you, so that's really the number side, the cash in, fees and so on. Now what if, I'm going to come and maybe look at more sales marketing here. If you look at this particular business, it's a similar scenario, cash in, invoices out, billable work. Now what if this business, they want to grow approximately, let's call it 2,300 per week. They want to go from 6.2 per week to 8.5. It's over 100,000 per year. But now what if this, unlike the accountant, this particular business doesn't have that extra 100,000 in orders or in work, so they have to go and actually find it. Now here's where you get into the sales and marketing KPIs, and what this particular, you can see here, so the step before this business can do billable work for people is that they have to actually win the quote and win work. So you can see here they have a target of winning extra work. To win work, they need to quote it. They won't actually be successful with every quote they do. In this case, they're saying it's about 1 in 4. So for every 100 euros they actually go and quote, they expect to win 25 or 25%. So to get the quotes sent out, they need to have sales meetings. In this case, a target of 4 per week. How do they get sales meetings? Well, they have to do marketing activity, optimize their website, maybe some pay-per-click ads. So again, what I love about this is the lead and lag factors here. And when you really get tuned into your figures, every business has conversion rates. So how many people do you have to meet to get a new client? What is the average piece of new client work? And the numbers you will able to work out. So in this case, they figure that if they have sales meetings, that he will actually convert 1 in 4, and that should help him hit their sales targets. So there's some examples. So what I'd say to you is that if you haven't done KPI reports before and you want to introduce them, and for the huddle you really should have one main KPI, then I think what you need to do is really just ask yourself, what is the most important figure for us to measure every week? Now, for a lot of businesses, if I had to guess what it is, a lot of service businesses, it's the billable work, or back to the accountant calls it billable work or WHIP. It's the actual work that the people in your office do every week. So in the case of the accountant, he expects to get 30 billable hours out of each staff member. They have different charge out rates depending on their seniority. The partner is probably 100 euros an hour. 32 hours will give 3,200. If this particular accountant, if each of those accountants hits their billable work target every week, they should be invoicing out 8,000, and the cash will come in eventually. They will grow their business by 100,000. So I'd recommend that you pick the main figure for your business, and for many of you, I would think that is the billable work you do, is the work that's produced in your office. If you can track it for the office, great. If you can break it down individual by individual, even better. And once you know what it is and you have a target to grow your sales, you could split it out by individual. and that's a really good way to just get into KPIs. Is pick your most important figure, start measuring it and tracking it, and set a target to improve it.